So I have a personal trainer at my health club. His name is Jason. I've been with Jason for a long time. I would look better if I ate what Jason told me to eat. I don't do that, so the result is not as good as if I follow Jason's advice, because I can only follow his advice for the physical things we do. So anyway, Jason, he's been my trainer for probably more than 12 or 14 years, been a long time. And I asked Jason, every time there's a Powerball lottery, you guys know what a Powerball lottery is? Like sometimes the payout will be like 500 million, 700 million, and whenever the payout is really big, Jason always buys a ticket, okay? So I asked Jason, I said, Jason, listen, what's gonna happen if you win the Powerball? Okay, can you explain what your life is going to be like one day after you get the 500 million? Okay, so Jason thought about it, and he said, I just want to hang out at the club. Okay, so probably I said, how are you going to dress? How are you going to dress after the 500 million? He says, probably exactly the way I dress right now. And then what are you going to do in the morning? He said, I'm probably just going to come to the club. And I said, Jason, after you get the 500 million, am I going to be a client of yours? Okay, like, are you going to, like, am I going to be? He says, yeah, I'll probably keep you as a client. Some of the clients I will drop, okay? I just make it a little flexible, which one I want. But I'll probably just come and hang out at the club, and that's it, okay? So when Jason told me that, it reminded me of what Buffett says. So what Buffett says is that you should take the job you would do if you were not getting paid. Okay? So it's very important that when you pick in terms of what career or job or company you go to work for, that if there was a way you could support yourself, pay your rent, etc., and this company paid you nothing, you still go to work there. If you do that, you have made the right decision, okay? If you make the decision based on the highest pay or the most prestigious name or any of those things, that's the wrong way to make a decision. You will probably later regret that decision. So this is the first talk I think I'm giving where I did not put on pants. Did you notice I did not put on pants? Okay? Like it's exposed. The legs are exposed. It's terrible. Okay? So why did I not put on pants? Okay? The reason I did not put on pants is I wanted you guys to see me the way I am dressed every day. Okay? I did not wear special clothes for you today. I'm sorry. Okay? Every day, and Fahad and Jaya, they work with me. They've got sick of looking at my legs. They wish I would cover them, but it's the way it is. So every day when I go to work in shorts. Okay? In fact, I'm dressed like this. Okay? And why do I do that? Why do I not have, because I'm running an investment fund, about $800 million, it's a serious activity, why do I not put on a suit and tie and go to work? Because I think I'll be less comfortable and I will not be as excited to do that every day. Okay? Like I like my Nike sneakers. Do you like my sneakers? I think it's better than wearing the dress shoes. So the reason I did this is because if pabrai funds did not pay me, just like with Jason not getting paid, I would want some place to go to work, and I would probably dress like this. So I don't want to do something which I'm doing because I'm getting paid, because that's the wrong decision. And also I learned many things from Warren and Charlie, especially from Warren. One of the things I learned is to run an empty calendar, okay? Nothing on the schedule. Like Warren will show you his calendar for days and weeks. He has nothing on the schedule. He just comes to work, he reads. If he wants to call someone, he'll call someone, but there's nothing that at 10 a.m. he has to do something and 10:30 something else. He doesn't work like that. Neither does Charlie work like that. And when I saw that that's how these guys work, I said, that's really good. And I'll copy that. Okay, so I copied the fact that, like today I had peaking you on the schedule. Okay, I think it's the only thing on my schedule this week. Okay, usually they might maximum like one thing or something. Sometimes there's nothing on the schedule. And so how does Buffett operate, such a large company with so many CEOs, so many things, with nothing on the calendar? Because what will happen with him is some senator will call him. Mr. Buffett, can we meet tomorrow for lunch, for example, right? Or like Jeff Bezos will call him. Can we meet? Okay, and what Buffett said is, you have to be really good at saying no. Really good at saying no. So if I wanted to fill my calendar, it's very easy to fill. Every day people make all kinds of requests. Okay, so I have about 400 investors, okay, all over the world. I can't even remember the last time I ever had a phone call with any of them, or ever had an email with any of them, or when I last met them. Okay, so I learned from Warren Buffett when he ran the Buffett partnerships. He told his investors, I'm open for one day of the year when we have our meeting. And you can come to the meeting, and on that day, we can talk about whatever you want to talk about. And the other 364 days, I'm working, I'm not available to you. So if you want to ask me something, come on that one day. And I'll give you an annual letter which will explain what's going on. So Buffett said his communication to his investors was, actually he did two letters, a 6-month and 1-year letter to investors, and once a year an annual meeting. Now, when he did it like that, what happened is that his time got freed up, right? Because he doesn't have to, like, let's say my fund goes down 20%. I don't want to sit there all day answering questions why it's down. Okay, so actually what happens is, when the fund is down, nobody calls because they're very well trained. I spent a lot of time training them because they know even if they call, they get no data. So there's no point calling. Okay, so basically what happens is that, and I did all of that because I wanted to have a lifestyle which was set up so that I would do this if I was not getting paid. If I have to go to work and I have 30 calls to answer or a lot of emails to look at or whatever else, it just becomes a drag. So we don't. So I could not come up with these ideas on my own. I came up with this idea from Warren and Charlie, and I copied it. So one of the most important models that you can adopt is the model of cloning. When you see someone doing something smart, just incorporate it. That's a good way to go. There's a friend of mine, Guy Spear. He came to Peking U with me, I think 2-3 years ago. And Guy and I are good friends, and in fact he was just in Irvine last week, and we were in Vancouver before that for the TED conference the week before that, so we are very good friends. And he's an investor. He manages about 200 odd million. And many times we talk about different stocks and ideas to, just get different perspectives. So Guy loves to own these great businesses that have very strong moats, and they are blue chip, really good businesses, okay? The problem is that when you own these really great businesses, everybody knows they are great, okay? So the price is very high. Usually the price is very high. And I tell him, it's not about the great business, it's about the great investment. So a company can be really good. It doesn't mean it will be a good investment. And a company can be not so good, and it could be a great investment. So the interesting thing about the investing game is, if the game was simply about finding the best assets or the highest quality businesses, it would be a very simple game. Because we can obviously figure out what business is great and what business is not so great. That's not so hard to figure out. So I found this okay business in India, which I thought was going to become a better business. People haven't heard about it, it's kind of unknown. And I told Guy, this business, this quirky, unknown business, is going to be a great investment. Great investment. And I told him, so he owned MasterCard in his portfolio. MasterCard is a very good business. Very high quality, almost a oligopoly, 2-3 players own the market. They don't need any capital to run the business. I mean, like 40% of revenue is profit. It's a great business. I said, this MasterCard is like at 30 times earnings. You made a lot of money. He already made like 12 times what he put in. He bought it a long time back. He put 1 million, it became 12 million. So I said, you made a lot of money. It's not going to go from 12 million to 144 million. If in the last 12 years it went from 1 million to 12 million, let me just tell you, next 12 years it's not going from 12 to 144. So I said, Guy, listen, I shook him up. It's time to sell MasterCard and buy Suntech Realty in Mumbai, okay? This unknown company. And of course, Guy, in polite terms, told me, get lost. So, what I do when people do that is I like to play mathematical games. It's just fun to play mathematical games. This is a picture of a small poster in my office, and I have many of these. At any given time, I have maybe 10 of these. Because I run into these humans who don't understand the concept of great investment and great company. So I told Guy, okay, here's what we're going to do. It is October 14th, 2018. This is when I had this conversation with him. In your corner is the phenomenal MasterCard with the impregnable moat, oligopoly business, great CEO, everything is fantastic. And that's called the Guy Spear pick. At that time, MasterCard was $204 a share. In my corner, this small, stupid company in Mumbai, Suntech Realty. No one even heard of it, right? And MasterCard, the market cap was 212 billion. Okay, 212 billion. It's a blue chip company. Suntech is less than 700 million. It is absolutely, I agree with Guy. The guy running Suntech is not as good as the guy running MasterCard. The moat of MasterCard is a lot better than the moat of Suntech. But that's not what this contest is about. This contest is about, I gave him 12 years. So I said, we're not going to have a 1-year contest because anything can happen 1 year. Because basically one of the things that Munger and Buffett say that if you have a business with great economics, over the long term, your results will match the returns that the business generates over the long term. So MasterCard generates great returns. And I said, Guy, you've got such a great company. I got this useless company. We're going to go for 12 years. And every year, now when it is October 13th, 2019, it'll be a pleasure to go to work in shorts and send Guy an email. Dear Guy, it has been 1 year. Here's where we stand so far. 1 round is over. Another 11 rounds to go. So let's look a little further in these two businesses. Look at that. This is MasterCard. If you bought MasterCard at the IPO, when it IPO'd in 2006, it was $4.23 in the IPO in 2006. And now, yesterday, it's $254. More than 50 times, maybe 55 times in 13 years. Unbelievable. And Guy didn't even buy over here. I think he bought at maybe around $20 a share, maybe somewhere here. 2010, somewhere here he bought. And every time I meet Guy, I tell Guy, have we sold MasterCard? No, I cannot sell MasterCard. It's too precious. Precious, cannot sell it. How can I sell it? Look at this. Can you sell this? You can't sell this, okay? And then we have just some data, okay? So it's 261 billion market cap. The trailing PE is 42. I'm almost having like a cardiac, 42 times trailing PE. Trailing return on equity is 106. We give you all the slides. You don't need to take pictures, don't worry. I send you all the slides. Trailing return on equity, 106%. And annualized return since the IPO, 37%. Unbelievable, great. But that's in the past. It's not going to help Guy in the future. We care about the future, we don't care about the past, right? So now here's Suntech. Look at the stupid chart, okay? MasterCard, so beautiful. Suntech, so useless, okay? Now, let me tell you why I don't want to make this session about stock tips. So don't think this is a stock tip. It's just to explain some concepts, okay? So in India, about 3 years ago, there was something that known as demonetization that took place. Some of you may be familiar with it, but what the government did is they made a bunch of currency notes illegal, and you had to put those in a bank and then get different notes because they wanted to wipe out cash transactions and black money and all these things. You know, there's an underground economy, they want to kill that. So real estate transactions in India in 2016 and earlier, they were always some portion paid by check and some portion under the table cash. It's a combination, right? When demonetization took place, it became impossible to pay cash because the cash is all illegal. So what happened is the real estate firms, most of them, they dealt in a lot of cash. And so people thought, oh, the real estate market is just clobbered. It's gone because you can't, now people don't have the money. You know, they can't come up with money from the banks. And so I noticed that in November or December of 2016, that these real estate companies that were publicly traded had collapsed in value because of this thing. But the people forgot something when they did that. So if we look at that circle, when Suntec was trading about 100 share, one could do a very simple exercise at that time. I could look at the real estate Suntec owned, because it was just listed, what they own. They had a bunch of finished apartments, they have in construction, they have land, all these things. Those have a valuation, either a market value or a cost value. And this was a company, there were few companies that never dealt in cash. They always did things the right way. And so before demonetization, it was a disadvantage to them. Because people would try to tell them, no, I cannot do this if you don't do cash. They said, we can't do any other way. We have to do everything properly. After demonetization, what happened is that 90% of the real estate companies disappeared. They can no longer function in that economy. So there were three things that took place in India in real estate. Demonetization, something known as RERA, Real Estate Regulatory Act, and GST, Goods and Services Tax. The combination of these three, the end result was that 90% of the developers were out of business. And very, very few developers were left standing. The ones that were left standing were the ones that always conducted their affairs with very high quality. You know, they delivered the properties, they did everything by the rules, they followed everything. Suntec was one of them. And so at that time, when the stock was at about 100, the market value of the company was less than $200 million. Just one project that they had, where they had 60 finished apartments in the heart of Mumbai, those apartments were worth about 500 million. There's no debt. So the market cap is 200 million. They have 25 projects. One project is 500 million. Okay, there are another 24. So when I started to look at the value of everything they had, it was many times the value of the stock. There's no comparison. And reason why is that? Because people, when there is a seismic event like this, demonetization, they just run to the exit. Everyone just sell the stock and run, right? So the stock is sitting there, no one's interested. I am interested. I tell the broker, every share. Anyone who has any shares, just buy as much as you can, okay? And now we own 9.999%. That's the maximum allowed to own. So the maximum that I could buy, I bought. 1/10 of the company we own.